Marathe, the MD and CEO of the bank, joining in. Hi, sir. Thank you very much for taking the time out. So now, what does this mean for you? Prompt corrective action, and what might your interaction with the RBI have been since then?
Yeah, good morning, ma'am. This prompt corrective action, as you are aware, there are 3 threshold points and there are 4 parameters. So we are covered under the asset quality parameter in terms of its net NPA ratio, which has come to 11.76%. Last year it was 6.35%, and this year it has jumped to 11.76% because of a jump in the gross NPAs. And because of that, we are brought under this PCA. And as far as the guidance is concerned, there are no material barricades put in, neither there are any significant speed breakers. So the normal business will continue, but we'll have to take care of certain guidelines. Particularly, we are not able to pay dividend, which we otherwise also did not pay last year as well as this year. We have to bring in some more capital, which is already on course. We have already taken permission from the shareholders for raising 2,000 crores of capital, which should see us through the normal growth current year as well as next year.
But sir, do you think that you can raise capital to the tune of 2,000 crores successfully?
This is the outer limit, ma'am. This is not the entire amount which will be required to remain above the benchmark levels. That ratio will be still maintained with much lesser capital. And it has 2 sides, numerator as well as the denominator. So the numerator is the capital, while the denominator we are going to control our risk-weighted assets. So net it will not be 2,000, but we have taken a permission from the shareholders on our outer side.
So as you go through some of these measures, including, as you mentioned, you can't increase your risk-weighted assets, you can't start new lines of business, you can't renew higher cost deposits. So as you go through this PCA, what will that materially mean for the numbers that we'll see at the end of Q1 and Q2? You had a loss at the end of the 4th quarter. Provisions were quite high at about 1,800 crores. How will those numbers look as we go through the PCA process?
Yep. As far as the... Hello?
Yes, sir.
Yeah, as far as the liabilities are concerned, we are very much on track. Our total expenses as well as the interest expenses did not grow much. As far as the high-cost deposits are concerned, we are not growing the high-cost deposits. We have entirely shed our CDs. So our CASA ratio is already 44.5%, and we are hopeful that we'll be continuing this ratio. And we are not going to contract too many liabilities at a high cost. Our CD ratio, if you see, last year it was 80%. Because of the demonetization and high liquidity, it has already come down to 73%. So as far as the deposit liability cost is concerned, we are very much on track.
Okay.
As far as the risk-weighted assets are concerned, it's a game. We are already on to the rebalancing of our portfolio towards more of the SME and the retail portfolio. And that will help us in containing the risk-weighted assets.
Okay. Sir, since you mentioned retail, your NPA, your agri NPA as of last quarter was around 12% and correct me if I'm mistaken. Now we have this whole farm loan waiver issue to deal with as well. I know your comments could be limited on this, but I just wanted your thoughts in terms of the way forward, sir. For the agri NPA specifically, and if you see collection efficiency being impacted, maybe credit quality as a whole being impacted?
There are 2-3 aspects to this. One is you are right that our NPAs in the agri have been to the tune of 11 to 12%. But as we are seeing that there are a lot of state governments coming out with this loan waiver, and I personally feel that it will prove to be a boon rather than a bane as far as the agriculture portfolio is concerned, because whatever the bad debts or the overdues are concerned, they will be recovered or paid by the concerned state government, and that will allow us to do the fresh lending and the recoveries will be better. So I see it as a positive as far as the agricultural loans are concerned.
Sir, what has been the sort of experience with respect to upgrades or recoveries so far in the 1st quarter? Can you give us some insights on the asset quality trends that you are seeing so far this Q1 of FY18? I think your gross NPAs were just under 17% at the end of Q4.
Last year, that is 16-17, the increase in the gross NPA has been to the tune of 7,000 crores. And as against many other banks, our bank's AQR got translated only in the last year, that is in February, which added about 3,000 crores to these incremental NPAs. And we don't see much of upside on this front so far. And our recoveries have been quite strong. In the first 2 months, we have been able to recover more than 200 crores. And the entire machinery is now geared up. So recoveries plus upgradation, and we will also be having a good amount of stock in the DB3 portfolio where the provisions are already 100%, which will qualify for writing off. So to the extent our balance sheet permits and the P&L permits, will be doing some write-offs also.
Okay.
Net, we want to contain our slippages and the upgradations on a balanced portfolio.
Okay. Quickly, sir, before we let you go, is there any chance that you might have been spoken or approached by the government in terms of possible talks of a possible consolidation merger with other banks simply because of the NPA situation?
No, not so far. Not so far. No news from that front.
Okay. All right. Fair enough. So we're going to let you go on that note. Thank you very much.